it's early yet in the amount of QE. I mean, first off, I guess the repo operations, the term repos, $1 trillion that's not being taken up by the street, though that's more like a temporary, it's to ease funding pressures. So that's all good. And the fact that a lot of it's not being taken up by the dealers shows you that the funding pressures are nothing like what occurred under in Lehman, the crisis then when everyone stopped trading with one another. So that's all good. The stock market, I'm surprised we've reversed. We were up 1,100 points, now down 200 points for Dow stock futures. Stock futures used to like Fed QE, so Powell gave them that in the Sunday 5 o'clock Sunday afternoon announcement. Thank you for that announcement, Sunday afternoon. They said they were going to buy 500 billion treasuries, so that's a lot. They're just starting out on that process of buying 500 billion. They've barely bought that much yet, and we'll see what that does. So they're trying to foam the runway here.
Yeah. So I think when you look at the actions that have been taken by the Fed and been taken so aggressively, there does seem to be a sense, at least from some of the folks that come on our air, that maybe it actually spooked the markets because of how quickly and how swiftly it was done. You finally start to get some data points out. The New York manufacturing activity seeing a record drop in March. We're going to have FedEx earnings after the bell, which gives you a sense of trade flows and how freight is moving right now in real time as well. What are the key metrics you're watching, and are they telling you that we're already in recession?
Well, I guess we could say the start of the recession, or the best month that we had for the economy before turning down, could have been March. You can do that. But it is, I have to admit, it's pretty odd for me as an economist to try and forecast a recession now when we just got 273,000 new payroll jobs in the last report for the month of February. So this is a very odd situation. I would say if this is going to be a recession, and everyone seems to be falling all over each other trying to be the first to forecast a recession here, this is a man-made recession. It's a coronavirus recession. It's something that's, there's nothing fundamentally wrong. The underpinnings of the economy are not weak. This is just a two-week, quarantine with your kids. So it's caused by a virus. The last two recessions we had, there was a stock market bubble that went on for 5 years. And there was a housing market bubble. So we have none of that. That's why I'd be a little bit more confident in saying that this recession isn't something that's going to persist. It could be over briefly.